Good evening, all. Ira Epstein with your financial market wrap-up. And your wrap-up is now for Wednesday, and we're sitting here at the 23rd of August, 2022, about 5:50 p.m. Central Time. I have been taking it easy for 3 days, not doing an awful lot in the markets by design. Number one, thin market conditions, thinner than normal because a lot of traders don't want to trade in front of the Jackson Hole Symposium, which opens tomorrow. So by the close Saturday, when the symposium ends, there's going to be a lot written. I'll be busy writing papers over the weekend, looking at the market and getting ready to throw on a lot of positions. This is when you open yourself up. Hey, I'm going back into the markets. Why not? In the grain markets, by the way, we want to get rid of SEP wheat. We're going to move to the Ds. We've already moved to the Nov Brent. We're going to get rid of September natural gas, September gasoline. I'll be making these moves probably tomorrow. Get yourself ready in the grains, and it's been this way that every day that comes out, you get a Crop Scout or a Pro Farmer Tour update. You're seeing more and less Illinois bumper crops, but I could have told you that when I went to pick up my little Ivy that I show every now and then in my different videos. She was in a place in Illinois that's in farmland, and the crops are just phenomenal. I went shooting this weekend. I love to handgun shoot. And the corn, really high. I got out of the car, I'm looking, I had soybeans that looked like they could have been planted on my front yard. They looked like real bushes, not a soybean plant. So I knew that our numbers here were going to be great, and that's how they're coming out. So the tour is that. But I'm hearing Iowa's not that way, Nebraska's not that way, the Dakotas aren't that way. So you're getting mixtures here, and now the question is when everything's put in, we need somebody, and it'll be, for me, it'll be the Linn Group. They'll put everything into the hopper, and they'll come up with their numbers and say, hey, this met it, this didn't meet it, and where we're at. But that's why you're 20 cents either way almost every single day, and I'm giving you the reason. Why trade that? Let that come out of the way, and now start going for what you think. After these tours are over, then it's all about harvest. Can you bring the grains in? In the S&P, we peaked and we're backing off a little bit. You're down about 2% so far for the week. If we take a look at the daily bar chart, you can see how you've just slipped back a little bit here. You've still got a pattern that's bearish with lower highs, lower lows, and as I pointed out, you're back into an old support area right through here. At the same time, the market slid right through the line in the sand, the 18-day average, and it's just stalled under it. But it's usually you'll do better by hanging in there by it. It didn't do it this time. Will the 100-day get hit? It might, and the Bollinger Band's right under it. So I'm going to look for support, not a buy, but support, short covering to hit if you get between 40.79 and 40.57 and a quarter, and you're already in oversold territory. On rallies, I would assume that the 18-day average is going to be an area that the market wants to go back to and go, let's see what everybody says in Jackson Hole. When we get to the NASDAQ, you can see how close it got to the 100 in the Bollinger Band. Again, oversold condition, trend down, doesn't act like it wants to quite get there just yet. Maybe it'll take one of the Fed members, maybe another central banker to say something real bearish to spook the market to get there. On the other hand, if it rallies, the 18-day average should be the resistance point. In the Dow, it's the same. You've got your 100 and your Bollinger Band. Doesn't seem to want to get there. 18-day average is the zone. And in the Russell, it's going to be the 18-day average is the zone. So I can see where the markets are just fighting away, not wanting to do anything one way or the other. In the VIX, you can see how the market here got up to the combination of the upper Bollinger Band and the 200-day average and just ran out of steam. It's exactly what I teach in my enhanced Bollinger Band course. Take the darn course. Learn how to trade with your other hand. It's so important. In the bonds, remember I said we could get a gorilla glue trade. That's what I call it. It's when the market locks in on this lower band, and then it creates a bearish embedded reading. You'll get your pop when the red line closes over 21. Up until then, rallies in the market, in my opinion, will be sold. It is the same thing in the 10-year note. In the dollar index, the gorilla glue is to the upside. So Dollar bullish, interest rates going to go higher. Gee, there's no surprise on all that. And embedded readings develop in all those. At the same time, the euro, gorilla glue trade to the downside. Still bearish. Hard rallies probably going to be a selling opportunity now that you're embedded. But the word is get a good rally out of it and see if the market can then back off from that rally. In the British pound, it's similar. Not quite the gorilla glue trade. You missed it today, so you only had 4 days in a row of hitting it. I like it to go further, but you're developing that embedded reading. So we're starting to get the bearish momentum locking in, and we're getting markets that are either running at or moving to the right-hand side of the Bollinger Band and saying in one swift word until these red lines pop over 21, sell me on a good rally. That's how I'm interpreting it. I don't see anything in Bitcoin. It fell all the way back here now to the lower Bollinger Band, and it's found its support there. Now, this is October Brent versus October WTI. I'm going to move to November's. So be ready. I might do it as soon as tomorrow. But you can see how this is narrowing in as the differential between the two. Different contracts come together. You went up today in the October Brent, and I want to finish this up and saying, hey, if you were long, that's where I think the pros would have you come out right through there. And WTI, the identical thing. Doesn't mean you can't go higher. That was the easy money, the first challenge of the Bollinger Band. Now you want sideline action to see does it embed or correct. That's where you're at. Gasoline, you want to be in the October now. I dropped the September. Could go down here to 250, 670. The season's over. The kids are back in school early this year in many states. Families are going to be home. They might travel short distances. The big driving like you had in July is done. And how many days in a row is it now that prices, gas buddy, keep basically slipping in AAA? So when we take a look at the natural gas, well, up to the Bollinger Band, you're not embedded, you're overbought. It's probably a good period where you're watching, you're not doing much of anything just yet, but you might want to go to the weekly chart and see what that offers. Now, making life simple for you, if you learn how to work with these Bollinger Bands, especially with the slow stochastic, as I teach in I think it's my 13-chapter course, you're going to learn what to do. It's a video. See what I do, you do the same thing. Then, as part of the video, let's assume you're not one of my subscribers in my morning videos. I give them to you free for a 2-week period so that you can see what I'm doing in live time, reinforcing what you're learning. Come on, it's not even $100 to learn that. It's going to stick with you. So how do you get there? Watch this ad, or you can just click up at the top of the screen here, and it'll take you right there when you see that icon. I'm Ira. You have a good day. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all 3 of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein on the road to your education.